For the last, 5 years, I feel like I've had the same argument at every dinner party.
Oh, I know this one.
Yeah. You mentioned Palantir, and someone immediately rolls their eyes. They go, it's a black box. It's a consultancy, not a tech firm. It's all human labor. It doesn't scale. Yeah. And for a long time, the data was just murky enough that you couldn't really prove them wrong. But looking at this Q4 2025 earnings report that just dropped, I think that argument is officially over.
It is.
The black box is wide open. And it turns out it's basically a cash printing machine. Before we dive in, this analysis is brought to you by StockAnalytics.ai. Get institutional-grade research on over 600 stocks for just $10 a month. Plus, request any ticker and download your own video analysis. Start your 7-day free trial at StockAnalytics.ai. Now, let's get into it.
So our mission today is to really unpack what just happened with Palantir ticker PLTR, because calling this a beat feels like, I don't know, a massive understatement.
It really is. The stock is reacting violently in post-market trading. It's up somewhere between like 7 and 9%. But the price is almost the least interesting part of this story. The actual financials have fundamentally changed.
It's a real vindication moment. We're not just looking at a good quarter. We are looking at a huge structural shift. The whole bear case for Palantir was always they can't scale without hiring thousands of new engineers.
Right, that was the thesis.
And this report, specifically the data around their artificial intelligence platform, AIP, it just takes that entire thesis out back and, well, puts it out of its misery.
Exactly. It's the I told you so quarter. But okay, let's stop talking in generalities and get into the raw damage. I want to pull up the numbers because they are just staggering.
The at-a-glance scorecard.
Okay, so Wall Street has these armies of analysts, right, with all of their sophisticated models, and they predicted Palantir would bring in about $1.34 billion in revenue.
Yeah.
So what did they actually drop?
They came in at $1.41 billion. So that's a massive beat, about 5.2% above what everyone was expecting. And in the world of large cap software, beating by 0.5% is pretty normal.
Yeah, it's a good day.
Beating by over 5%, that's a statement.
But it's not the raw dollar amount that made me spill my coffee this morning. It's the growth rate. Break that down for me. Last year, Q4 2024, they did $828 million.
Right. So going from $828 million to $1.41 billion gives you a year-over-year revenue growth of 70.3%.
70%? I mean, just stop and think about that. This is a company that was already doing billions. Usually you have the law of large numbers, right? Gravity kicks in.
Exactly. Growing a lemonade stand by 70% is easy. Growing a multi-billion-dollar company by 70% is supposed to be, mathematically impossible. That's exactly right. You're supposed to see deceleration. You go from 40% growth to 30 to 20. Palantir has actually re-accelerated. They've almost doubled their growth rate from where they were a couple of years ago. It defies the whole life cycle of a software company.
It shows that demand isn't just creeping up.
It's exploding. But this is usually where the critics pivot, right?
Yeah, they go, okay, fine, they're growing revenue, but they're just burning cash to do it, selling dollar bills for 90 cents.
And that brings us to the most shocking number in this whole report, the net income. And we're talking GAAP net income here, real actual profit.
Okay.
In Q4 of 2024, they made $79 million.
79, got it.
In Q4 of 2025, they just reported $609 million.
Wait, hold on. Say that again. They went from 79 million to 609 million.
Yes.
What is that? A 670% increase?
Yeah.
That's absurd. How does revenue grow 70%, which is already huge, but profit grows 10 times faster?
It's an explosion of profitability, and it all trickles down to the earnings per share. They posted 24 cents in GAAP EPS, beating estimates, but there's a tiny detail in there that I think is the most important signal of all.
You're talking about the gap between the real numbers and the adjusted numbers.
Exactly. For years, Palantir had this huge gap between GAAP EPS and adjusted EPS. Why? Because of stock-based compensation, SBC. They were paying employees in stock.
Right, which investors hated. It felt like hidden inflation.
Well, look at this quarter. GAAP EPS is 24 cents. Adjusted EPS is 25 cents. The gap is 1 penny.
It's gone.
It's gone. The SBC drag is over. They are generating so much pure cash profit now that the stock compensation is just a rounding error. That's the moment a tech company finally grows up.
So the black box is now just a transparent piggy bank. But I want to go back to my question. How on earth do you grow profit 670% when sales only grew 70? There has to be some kind of mechanic behind that.
The engine of profitability?
I feel like this is a classic case of what, business nerds call operating leverage. But you so rarely see it in the wild like this.
It's textbook, but yeah, the textbook examples are never this extreme.
Okay, so let me try to frame this, and you tell me if I'm getting it right. Palantir spent, the last 2 decades building the factory. Foundry, Gotham, Apollo. Billions on R&D. That money's gone, sunk costs. But now the software is built.
Correct. The heavy lifting is done.
So if I'm Palantir and I sell a license to a new hospital system, what does it actually cost me to deliver that? I don't have to build the software again. I just, send them a login?
Essentially, yeah.
Yep.
That's the magic of the zero marginal cost of software. The cost to service that new customer is negligible. So this quarter, they added $579 million in new revenue.
Okay.
But their operating expenses, rent, salaries, servers, they stayed pretty much flat.
So that extra $500 million just flowed straight past the expense line and landed right in the bank account.
That is exactly what happened. It's why you see their adjusted operating income more than doubling, up 114%. And their margins expanded by 1,200 basis points.
1,200.
They're getting significantly more efficient the bigger they get. It's the complete opposite of a consultancy. A consultancy has to hire more people to make more money.
Right.
Palantir's proving they can make way more money without adding much more cost.
Which just kills their service company argument, doesn't it?
Yeah.
Service companies don't have margins that expand by 1,200 basis points in a single year.
No, they do not. This is pure software economics finally kicking in at scale.
Okay, so the machine is incredibly efficient. But who is feeding the machine? I want to break down where all this money is actually coming from, because the narrative used to be Palantir is just for spies.
The engine room business segment performance?
So we usually split Palantir into 2 buckets, right? U.S. government, the spy stuff, and U.S. commercial, the corporate stuff. Which one was the hero this quarter?
Well, they're both winning, but U.S. commercial is the absolute superstar. This is that AIP revolution we keep hearing about. The private sector is just devouring this platform.
We saw U.S. commercial revenue grow 137%. That is,
Yeah.
For a sector that was struggling to even figure out what Palantir did 3 years ago, that's a massive change.
It is. And the U.S. government side, which, had been a bit of a worry for investors.
Yeah, growth had stalled out there for a while.
It had. But now it's completely reaccelerated.
Why the comeback there? Is it just general defense spending, or is something specific going on?
It's modernization. The military isn't just buying tanks anymore, they're buying logic. We're seeing big programs like Titan and Mission Manager scaling up. And, frankly, just look at the news. The world is on fire.
Right.
Geopolitical instability is a huge tailwind for Palantir. When things get dangerous, the government doesn't experiment with unproven startups. They go to the platform that they know works.
That makes a lot of sense. But I want to talk about how they're selling this, especially on the commercial side. We keep seeing this term boot camps.
Right.
And I think people miss how radical this is. Usually, enterprise software sales is a total nightmare. It's 6 months of steak dinners, golf with the CIO.
Endless slide decks.
A total slog. Palantir just threw that whole playbook out the window completely. They replaced all the schmoozing with engineering. The bootcamp model is basically, we don't want to talk to you. Give us your data for 5 days. We will build the solution right in front of your eyes. It's show, don't tell. And it's converting.
The conversion rates are astronomical. In this quarter alone, they closed 180 deals worth at least $1 million.
180. And get this, 61 deals worth at least $10 million. 61 $10 million deals in 90 days.
In 90 days. Think about the corporate friction involved in signing a $10 million check. You don't do that for a nice to have.
Oh, wait.
You do that because you ran a boot camp, saw the software solve a problem you've had for a decade, and you realized, we literally cannot run our business without this. AIP is becoming critical infrastructure.
Now, I noticed something really weird in the data, and I feel like we have to address it. We keep saying U.S. commercial and U.S. government. What about Europe? What about Asia?
This is the elephant in the room. If total revenue grew 70%, but U.S. revenue grew 93%, well, the math implies that international growth is lagging a lot.
It's a huge divergence.
Yeah.
Palantir is basically a U.S.-only story right now.
It is. And that raises a really uncomfortable question. Is Palantir failing internationally, or is the international market failing to adopt AI?
That's the big geopolitical angle, isn't it?
Yeah.
If the U.S. corporate sector is adopting this tech at 137% growth, and Europe is stuck in regulatory limbo or just moving slow.
Yeah.
That's not just a revenue problem for Palantir. That is a massive productivity gap for the rest of the world.
Exactly. It really looks like the U.S. is sprinting into the AI age, and the rest of the world is kind of watching from the sidelines. Palantir's dominance here might actually be a signal of a widening tech gap.
Fascinating. And a little terrifying. Okay, let's look at the safety net. Because when growth is this fast, sometimes things break.
Financial strength and shareholder rewards.
Let's check the bank account. Are they running on fumes to fuel all this growth?
Far from it. They have what we call a fortress balance sheet. They're sitting on $4.1 billion in cash and short-term treasuries.
Wow.
And crucially, zero debt.
Zero debt in this interest rate environment is a superpower.
It really is. No interest payments dragging down earnings. In fact, it's the opposite. Because they have that $4 billion parked in treasuries, they're actually earning interest. The cash pile is generating its own profit.
It's a flywheel.
It is.
Okay, I have to play devil's advocate for a second. We talked about stock-based comp. Even though the earnings gap has closed, they're still issuing new shares, right? So are existing shareholders getting diluted?
Technically, yes, the share count is going up. The weighted average diluted share count went from about 2.53 billion to 2.57 billion.
So my slice of the pie is getting a little bit smaller.
A little bit, but do the math on that. That's an increase of only about 1.6%.
1.6%.
So you suffered 1.6% dilution, but the company grew its net income by 670%.
Okay, when you put it that way, I think I can live with it.
Right. This is not toxic dilution where a dying company is printing shares just to keep the lights on. This is a growth company attracting top talent. And because the organic profit growth is so insane, that tiny bit of dilution gets completely swallowed up. It's very high-quality growth.
So the past was great, the present is profitable, but the market always trades on the future. What are they telling us about 2026?
The road ahead management's outlook and key takeaways.
Usually after a monster quarter like this, management tries to temper expectations. They say, okay, everyone, calm down. Next year will be tough. Did Palantir do that?
Not even close. The guidance is incredibly aggressive. They're guiding for 2026 revenue growth of 61% year over year.
So they expect this rocket ship to keep flying at almost the same speed.
They do. And Alex Karp, the CEO, he made a comment in the release that I think just defines the company's whole philosophy right now. He said, "We are an N of one."
Classic Karp, N of one.
Yeah.
Basically saying there is no competition. We're in a league of our own.
And he backed it up with this concept he calls commodity cognition. This is really important for understanding where AI is going.
Okay, break that down for me. Commodity cognition. It sounds like something out of a philosophy class.
Think of it this way. The large language models, GPT-4, Claude, Llama, those are becoming commodities like electricity or wheat.
Right.
Everyone has access to them. They're cheap. They're everywhere.
Yeah, I can get GPT-4 on my phone for $20.
Exactly. So the real value isn't in having the model. The value is in using it. Karp's point is that Palantir is the appliance. They are the infrastructure that takes that raw electricity of AI and actually turns it into business value.
Optimizing a supply chain, finding a terrorist, running a hospital.
Right. He believes Palantir is the only company that has figured out how to operationalize that commodity at scale.
That is a great analogy. It's like electricity changed the world, but the people who got rich weren't necessarily the ones generating the power. It was the ones who built the washing machines and the light bulbs and the factories that ran on it. Palantir is building the factory.
Precisely. And based on these Q4 numbers, the factory is open for business, and the line to get in is out the door.
So, final verdict.
The transformation is complete. Palantir has successfully pivoted from a, spooky government contractor to a high-growth, high-margin, mass-market software juggernaut. The financials are bulletproof, and the demand signal is just undeniable.
It really is incredible to see a company pivot that hard, that fast. Before we wrap up, I just keep coming back to that international split we talked about.
Yeah.
It feels like we're watching a real-time fracture in the global economy. If the U.S. is adopting commodity cognition, integrating AI into the bedrock of its economy, and Europe and Asia aren't, 5 years from now, are we looking at two completely different economic species? It feels like Palantir's U.S.-first dominance isn't just a business strategy. It's a warning signal about a geopolitical tech gap that is getting wider every single day. Just something to chew on.
It might be the most important macro trend that nobody is talking about. Agreed. All right, we have to hit the legal stuff before we get in trouble. Just a reminder, everyone listening, this analysis is not financial advice. We are just two avatars analyzing data. Please do your own research before making any investment decisions. Also, full disclosure, this report and our voices were generated by AI.
And that brings us to the end of this deep dive. Want institutional-grade stock research without the institutional price tag? Check out stockanalytics.ai. For just $10 a month, you get full access to our deep dive video library covering over 600 S&P 500 and NASDAQ 100 stocks, each with full source citations you can verify. Can't find the stock you're looking for? Request analysis on ANY ticker and download your own video within 24 hours. Upgrade to Pro for $20 a month and unlock our SEC Risk Scanner, which detects red flags in company filings before they hit the headlines, plus our Portfolio Diversification Analyzer to optimize your holdings. Start your 7-day free trial today at stockanalytics.ai. Make smarter investment decisions with research you can trust.